Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Korean investigators focus on a bird strike and landing gear failure as they look into the cause of the country's deadliest passenger jet crash. Syria's de facto leader says it could take up to 4 years to hold elections. In a TV interview, Ahmed al-Shara also said he plans to dissolve his Islamist group Hayat Tahrir al-Sham. And a state funeral to be held for former U.S. President Jimmy Carter, who's died in his Georgia home, aged 100. We look back at his dramatic term in office and his humanitarian legacy. It's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai, in for Jumana Versace. Well, good morning again, and welcome to the final 2 trading sessions of 2024. It feels a bit surreal that we're actually finally here at the end of what has been an eventful year and a very eventful past 8 weeks. We've had so much happening, between geopolitical shifts in the Middle East to shifting in central bank policy that has really caused a repricing in assets. If we take stock of all of that and look at where we're trading this morning, you can see here on the screen that investors are definitely taking a tone of caution heading into 2025. U.S. equity futures pointing lower, indicating that we are headed for another down day on Wall Street. We did see broad-based declines across Wall Street on Friday, led by losses in big tech, and we will talk more about that in just a minute. But first, I also want you to have a look at the U.S. 10-year Treasury yield, because we're trading a bit sideways at the moment, but still, the 10-year yield continues to remain firmly above 4.6% after climbing more than 20 basis points over the course of this month. And then Brent crude, not a whole lot of action, but I put this up on the screen here because Brent broke through $74 a barrel for the first time in about a month on Friday. So we are seeing a touch of strength for the oil market as we head into the end of the year. Now, let's get back to big tech as promised. Let's get a chart up for you here, which shows you the performance that we have seen for Magnificent 7 stocks over 2024. So I mentioned that it was big tech that led losses on Friday, and that is true. We saw declines of about 2% for this basket of stocks. But still, if you look at how we're tracking for 2024 as a whole, up more than 70%. I think the question now becomes what direction we see these stocks take from here. There has been a lot of talk out there about these companies now having such high valuations that perhaps it takes a bit of heat out of the market. Also, there was a Bloomberg survey earlier this month suggesting that we could see earnings growth start to decelerate in 2025 for these companies. So something to just keep in mind as we head into the trading session today and see whether these declines hold or whether we see further gains for the Magnificent 7. Well, let's talk more about one of our top stories this morning. South Korea is considering special inspections of Boeing 737-800 planes after Sunday's Jeju Airlines crash, which killed 179 people. Investigators are also getting help from the manufacturers and U.S. air safety authorities. Asia Transport reporter Danny Lee joins us now. So, Danny, what do we know so early on in these investigations? What are investigators focusing on?
There's a key focus on what happened with the aircraft in the minutes before the landing. There was a bird strike that happened to the aircraft, which caused the pilots to issue a mayday signal a few minutes before landing. And even before that, there was a warning from the airport, from the air traffic controllers, around the risks of bird strike. And so the cascade of events that took place in the moments before this critical phase of flight, the landing period, we had a whole spate of issues. And then when we saw footage emerge of this plane subsequently make a belly landing without its undercarriage down, that in itself, and the high-speed nature of the way in which it crash landed on the runway and then crashed into the end of the runway, into this fiery wreck, left a lot of a lot of people and a lot of investigators wondering what had happened. And clearly they're zeroing in on bird strikes, potential failure of the undercarriage, and anything else potentially which are keeping an open mind on that may have caused the failure of this aircraft. And so, given the toll, the loss of life here, the authorities are taking action to make sure that there is safety and insurance for the public, particularly with this type of jet involved.
Yeah, it was really unfortunate to see this, especially because there have been a spate of aviation accidents in recent years and in this past year as well. Put this crash into context for us and the nature of the other accidents that we've seen.
Yeah, this is this aircraft type, this Boeing 737-800. There are 4,000 of these aircraft in service around the world. And so, given it's a top-selling aircraft for Boeing, it's not the 737 MAX, which has been involved in a couple of twin fatal crashes in recent years. You know, it's a very reliable, dependable aircraft that airlines are happy to operate. And so, with 2023 being the best year for civil aviation in terms of there was no large fatal crashes. Clearly, 2024, there has been a huge spotlight, given we've seen at the start of this year and obviously now towards the end of this year and obviously even the last week or so. There's been a huge spotlight given the number of accidents, incidents, events that have played out in public here. So overall, aviation and flying does remain very safe. It's just that these kind of grim milestones, the worst crash for South Korea in its country for civil aviation, these kind of things being made is clearly going to be a difficult one for the public to follow.
Yeah, it'll be interesting to see what we learn from the black boxes of this most recent crash and what ultimately led to the accident. Thanks so much, Danny Lee, for all that. That's our Asia transport reporter, Danny Lee. Well, sticking in Asia for a moment, South Korean investigators are seeking a warrant to arrest President Yoon Suk-yeol after he failed to appear for questioning for the third time over his martial law declaration. Now, if it's granted, Yoon could become the first president in the country's history to be arrested while in office. Meanwhile, Finance Minister Choi Sang-mok is currently the interim leader after acting President Han Duck-soo was also impeached, deepening the political crisis in the country. Well, let's check in on how markets in Asia are faring now. Avril Hong is standing by in our Singapore studio. So, Avril, as we finished the week last week in Asia, things did look pretty green. Not so much this morning. What's moving over there?
Yeah, we're seeing that petering out of the Santa Claus rally after the negative handover from Wall Street, where tech led declines. So stocks in the region are mostly lower today, but focusing on what we're seeing in South Korea, because the Kospi actually managed to clock gains of about 1%. This is despite the political uncertainty in the country and comes against the backdrop of authorities in the country issuing a joint statement and pledging to do their best to help to stabilize markets. But it's hard to imagine this turnaround as anything convincing, given the thin liquidity that we're seeing. Also, how Korean assets were already among the worst performing in the region, even before the brief imposition of martial law in the country. This is because of growth concerns, so they're likely to remain under considerable pressure. A bit of divergence, we're seeing the mainland stock gauge clocking some gains into the lunch break, declines on the Hang Seng in Hong Kong. Christine?
All right, Avril, thanks so much. That's Avril Hong standing by for us in Singapore. Well, let's move our attention to here in the region now, because Syria's de facto leader says it could take up to 4 years to hold elections. Speaking to Saudi television network Al Arabiya, Ahmed al-Shara says he plans to dissolve his Islamist group Hayat Tahrir al-Sham, which led the insurgency that overthrew President Bashar al-Assad. Al-Shara says it will take time for Syria's different forces to hold political dialogue, as well as to rewrite the country's constitution. Let's bring in Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Onur, good to see you this morning. Some wide-ranging comments here that we got from the leader of HTS. Walk us through what we heard and what also it signals about the potential future in Syria.
The significance of Ahmed al-Shara's comments is that they mark the first time the de facto ruler of Syria provided a timeline, a possible timeline to bring the country and the political factions that are active there from what used to be a civil war, a heavy internal conflict that lasted 14 years, to a sort of political consensus where they can coexist together. 4 years, he said, will possibly take Syria to hold elections again. It sounds like a lot of time. But Ahmed al-Shara seems keen to highlight the fact that it is what is necessary to bring all these groups that were active in the civil war, that were fighting against each other or alongside each other, to basically lay down their arms and be part of a peaceful political process rewrite the constitution and take part in whatever Syria's political governance system will look like at the end of this process. That's why his remarks were significant, Christine.
Yeah, and he did say as well the country is going to need a lot of time to undertake reconstruction efforts. And speaking of reconstruction efforts, we heard comments from Turkey over the last couple of days that it hopes to play a role in that. What have we heard from Turkish officials on this matter?
It was Turkey's energy minister who made those comments late last week, Christine. They basically, this is the latest step in Turkey's efforts to basically make an outreach to Syria's new rulers. It stands to be a big beneficiary from the change of guard, so to speak, in Syria. And the latest remarks basically highlight Turkey's desire to be involved in Syria's reconstruction, which will obviously take up a lot of money and time. And to meet that need, Turkey says that they will talk to Syria's new leaders to have a role in the revival of the country's oil and gas sector. Right now, Syria produces about 5% of what it used to produce before the civil war began. It was never a huge oil exporter. It was a minnow producer, but still it had some oil and gas production. Now, Turkish officials say that that production can be revived, and the proceeds from that can be used to pay for reconstruction of Syria after 14 years of civil war internal conflict left much of the country basically no more than rubbles.
Yeah, and I suppose we're talking about just a small amount of output here, but that would be significant for Syria. Thanks so much, Onur, for sharing all of your insights. That's Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Well, Israeli Prime Minister Benjamin Netanyahu has had successful surgery to remove his prostate. Netanyahu's office says the 75-year-old has now been transferred to a secure underground recovery unit for observation in the coming days. Netanyahu is currently facing a corruption trial, but his testimony for this week has been canceled and tentatively rescheduled to resume on January 6th. Former U.S. President Jimmy Carter has died at his home in Georgia at the age of 100. The one-time peanut farmer leaves a legacy of promoting human rights, peace, and democracy. During his single term in office from 1977 to 1981, Carter brokered a historic peace accord between Israel and Egypt. But he also faced challenges including soaring inflation, energy shortages, and a hostage crisis in Iran. The longest living former U.S. president will receive a state funeral in Washington.
Today, America and the world, in my view, lost a remarkable leader. What I find extraordinary about Jimmy Carter, though, is that millions of people all around the world, all over the world, feel they lost a friend as well, even though they never met him. And that's because Jimmy Carter lived a life measured not by
U.S. Treasury Secretary Janet Yellen has told congressional leaders that special accounting maneuvers will be needed in mid-January to avoid breaching the debt limit. In a letter to lawmakers, she says that's likely to happen from around the 14th of January. That would kick off what is likely to be a prolonged tussle over fiscal policy ahead of the handover to the incoming Trump administration. Let's bring in Mansoor Mohi-uddin, chief economist at Bank of Singapore. Mansoor, thanks so much for joining us today. We just spoke there about the comments that we've heard from Janet Yellen and the U.S. running up against the debt ceiling in mid-January. This opens up the conversation nicely for us to talk about the fiscal policy risks and fiscal risks for the United States. How do you view the risks as we move into the early part of 2025?
Thanks very much, Christine. I mean, clearly, in the short term, the markets will be worried about the debt ceiling if it's going to start impinging from the middle of next month. More longer term, the markets are hoping to see some forms of more tax cuts from the Trump administration when it comes in, but also some further reforms that can make sure that the fiscal position in the US remains sustainable. And I have to say, Christine, I'm doubtful we'll get that. So my view is that bond yields, treasury yields, will continue to rise next year, both because of inflation concerns, but also because the markets will get increasingly worried about the fiscal picture in the US.
Well, we're already talking about a bond market that has come under significant pressure. U.S. 10-year yields have climbed more than 40 basis points over just the course of December alone. So in your view, you're saying they need to be higher.
That's right, yes. I think once the Trump administration starts, and if we start to get the more inflationary policies, for example, steep tariffs, tighter immigration controls, and at some stage prospective tax cuts, then I think markets will have to push Treasury yields even higher than they are, because the concern then will be that the Fed won't be able to cut interest rates any further. We think, Christine, that the Fed probably has maybe 1 or 2 more rate cuts at most next year. But once it stops cutting rates, the markets may fear that the next move has to be to put interest rates back up again later on in the year. That would definitely push 10-year yields higher from where they are now.
So let's talk about your views on Fed policy then, because you're saying 1 or 2 cuts. The Fed has projected that it will take 2 cuts to interest rates over the course of 2025. What to you would cause a situation that puts us in a scenario where we only get 1 cut? I mean, is it inflation? Is it the fiscal risks coming out of the United States? Is it Trump policy?
I think it's a combination of all of those things, Christine, but I am most worried about inflation. If you think about where we are now in terms of core inflation in the US, if you look at the Fed's own measure, it's still stuck just below 3%. The Fed are confident that inflation will keep falling, but then with the new administration coming in, if they do follow these more inflationary policies, particularly on tariffs, but also on immigration controls, and that then forces inflation back up, then it will be difficult for the Fed to keep on cutting interest rates. So yes, our view, Christine, is we probably get at least 1 more cut in March, because the Fed funds rate is still well above 4%. But another cut possibly in June is potentially likely. But beyond that, we think then the Fed will have to stop cutting rates. So we're looking for a terminal rate for Fed funds around 4%, Christine. I think that's higher than the markets are really expecting, and that's what makes us concerned, particularly about long-end bond yields.
Yeah, so we've covered the U.S. Let's talk a bit more globally now, especially as we move into the new year. What markets do you think are best placed to outperform going into 2025?
Yeah, if you think about equities, I do think even with our concerns about inflation and central banks not being able to cut interest rates much further, I think in the short term, equities will probably start next year, just as they're finishing this year, is still very firm. And that's both for the US, where markets are still obviously focused on AI hopes, more deregulation under the Trump administration, and corporate tax cuts later on the next year. But also here in Asia, we think Asian equities ex-Japan, they're still going to do well on the fact that you've got still very undemanding valuations. Central banks around the world are cutting interest rates. We do expect more stimulus out of China as well. The second half of the year, though, may be a lot more challenging for global markets, particularly if you get into higher tariffs and a trade war. But the first half of the year could actually still be surprisingly good for equities. For bonds, Christine, as I said, I'm concerned about inflation risks. So I'm concerned that the consensus view is for 10-year yields to keep falling back towards 4%. I think instead we'll go towards 5% instead, as the markets realize central banks haven't got many more rate cuts to come, and then realize also that inflation risks may return, and particularly once tariffs are announced. So I think equities look good first half of this year. Bonds definitely much less so at the long end of the curve.
All right, Mansoor, well, we could continue talking about all these topics for ages, but we'll have to leave it there. That's Mansoor Mohi-uddin, Chief Economist at Bank of Singapore. Thank you so much for your time. Well, coming up, the death toll climbs from post-election turmoil in Mozambique, prompting some companies to restrict operations. More on the country's escalating political crisis next. This is Bloomberg. A monitoring group in Mozambique says more than 260 people had been killed in post-election violence as of last Friday, most of them dying from police gunfire. The unrest has prompted companies such as Sasol and Sirral Resources to restrict operations, citing safety concerns and force majeure. For more, Bloomberg's Ondiro Oganga joins us from Kigali in Rwanda. So, Ondiro, it seems that there's been quite an escalation in the death count as of late, yet these protests have been going on since the election results in late October. Why are we seeing these recent unfolds now? What has prompted this escalation?
Hi, Christine. So the Constitutional Council upheld the election results, which was reflecting that Frelimo's candidate Daniel Chapo won the election. And this is what escalated tension in the country. We saw protests not only in Maputo, the capital city, but across the country. There was massive looting of shops, supermarkets, and equally food stores, and the damage is incomprehensible. There was also a lot of anger that was manifested in burning of government offices. And the Center for Human Rights and Democracy describes the situation as there was a thick black smoke covering air and a lot of blood covering the floor. The police chief also confirms that there was a prison break and 1,500 inmates escaped maximum security. And as lives continue to be lost, livelihoods affected, and the death toll rising, the government is coming under harsh criticism, one, for excessive use of force, and also dragging its feet towards brokering a peace deal. And protests are likely to continue as the country gears towards the inauguration of President-elect Daniel Chapo.
So where does Mozambique go from here? What is the next line of action that could possibly be taken to ease the turmoil and stop the violence?
The next step is negotiations, but that's going to be a tough nut to crack because no one is willing to make concessions. Even though we are seeing the grounds beginning to soften, opposition candidate Venancio Mondlane is saying he's open to dialogue with international mediators. You also have the president-elect adopting a very presidential tone, saying he's going to serve everybody without discrimination, and he's looking forward to a peaceful resolution once he takes over office. But then again, this protest and the impact are not only affecting lives and livelihoods, they're seeping into very critical sectors. In your intro, you mentioned mining sector. You have a ruby mine in the northern part of Mozambique that is responsible for close to half of global supply, almost halting their production because of this protest. You also have Sasol, who've limited their production to keep their people safe and also to protect their assets. And Tesla, supplier of graphite, has also declared a force majeure. And all these factors are just applying pressure on the incoming government and the present government to try and broker a peace deal to restore calm and peace in the country.
All right, Ondiro, thanks so much for sharing all of that. That's Bloomberg's Ondiro Oganga in Kigali for us. Well, here's a quick markets board for you as we head into the bottom half of the hour. It looks like U.S. equity futures continue to be under pressure, and we may be heading for another down day on Wall Street. Euro Stoxx futures as well in the red. Well, coming up, the future of gas transit through Ukraine is at a turning point if a last-minute deal isn't struck by Wednesday. The details coming up next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Korean investigators focus on a bird strike and landing gear failure as they look into the cause of the country's deadliest passenger jet crash. Syria's de facto leader says it could take up to 4 years to hold elections. In a TV interview, Ahmed al-Shara also said he plans to dissolve his Islamist group, Hayat Tahrir al-Sham. And a state funeral to be held for former U.S. President Jimmy Carter, who's died at his Georgia home at the age of 100. We look back at his dramatic term in office and also his humanitarian legacy. It's just gone 8:30 a.m. across the Emirates. I'm Christine Burke in Dubai. Well, happy Monday and welcome to the final two trading sessions of the year. If we take a look at how markets are shaping up heading into these last two trading sessions, it is clear that we are seeing a tone of caution coming through the markets. It needs to be said, though, that we are in a period of thinner trading volume, so moves do tend to be exacerbated and perhaps aren't any sign of huge new conviction tradings, but rather just thin liquidity in the markets. But even so, what we are seeing is that there's not a whole lot of risk appetite out there. You can see the MSCI Asia Pacific Index down almost 0.5%, and S&P futures as well pushing lower. We had a down day on Wall Street on Friday. Declines were actually pretty broad-based, but it was big tech that really led the sell-off. Again, it wasn't any one headline or any clear reason for the move, but rather just some steam perhaps coming out of the rally of more than 70% extent that we've seen so far this year for Magnificent Seven stocks. The dollar just a touch weaker this morning as well, and then Brent crude trading sideways, but do note that Brent is above $74 a barrel for the first time in about a month after closing above that level on Friday. Now, I want to show you something else when it comes to the Brent market, because this will set up a conversation that we're going to have in just a couple of minutes. But when we look at the performance of Brent over the course of the fourth quarter, you can see that Brent has been in the tightest trading range in 4 years in the fourth quarter. So we've seen gains or losses within a range of about $11 a barrel. And this is likely as we have various cross currents playing out in the markets between geopolitical tensions, of course, to changes in OPEC plus supply policy, to the Trump election and what it potentially means for policy in 2025. Well, let's talk more about energy, but this time about natural gas. So Slovakia is urging the European Commission to address the looming halt of Russian gas supplies through Ukraine, saying the economic impact on the EU will far outweigh the effect on Russia. Ukrainian President Volodymyr Zelensky is set to block Russian gas flows through his country from January. Greg Sullivan is Bloomberg's Russia economy and government editor, and he joins us now on our set in Dubai. So Greg, it's great to see you. Talk us through the current agreement that exists between Russia and Ukraine to allow Russian gas to flow to Europe, and what is potentially standing in the way or not of us getting a new deal over the line?
Well, that's right. Currently, Russian gas does flow through Ukraine to Europe. Now, Europe has been trying to wean itself off of the Russian gas since the start of the nearly 3-year-long invasion, but Hungary and Slovakia still continue to rely heavily on Russian gas. That is set to end, of course, after tomorrow. Amid the war, Zelensky has repeatedly said he won't renew the deal because he doesn't want the Russian gas to benefit the Kremlin's war machine. So for now, it looks like the deal is set to end. But of course, Hungary and Slovakia, reliant on this gas, are seeking ways to try and resurrect the deal. We know that they've appealed to the European Commission. And also, through a carrot-and-stick approach, Slovakia has threatened to turn off the power. For now, even if a last-minute deal could be reached, it looks somewhat unlikely that one will happen. And
if we move over from energy, but consider the status of the war between Russia and Ukraine, we did see some escalation last week. And we got some comments from Russia over the last couple of days, almost ruling out any ceasefire, but saying they are willing to talk about a pathway to peace.
Well, that's right. I mean, obviously, the big looming question here is Donald Trump coming to power in a month, and he said that he wants a quick end to the war, but a quick end looks somewhat unlikely. Russia has some momentum right now. It is making very inching, slow progress in the east along the front. It's upped its missile and drone attacks on Ukraine's power infrastructure, causing blackouts across the country. And, you know, even in Kursk, where Ukraine had that surprise incursion earlier this year, they've lost some ground, and U.S. officials recently said that they might end up losing all their gains in a matter of months. So for Russia, there's not really the motivation to immediately rush into talks, and they may be seeking to drag it out and consolidate their advantage.
What have we heard from the Ukrainian side of things in terms of where they stand about possibly coming to the table for negotiations?
Well, we know that Zelensky used to say that, you know, the loss of territory was not permissible and not favorable to Ukraine, but now there does seem to be a little bit more of a favorable tone with Trump coming into office. Obviously, the damage against the power infrastructure has been very debilitating to Ukraine, and Russia has the momentum at the moment. So they may have more of an incentive to get to the negotiating table than Russia at this point.
Yeah, it seems like every conversation that we're having today revolves around this idea. We have to wait and see what Trump does. So I guess this is exactly that case. Greg, thanks so much. That's Bloomberg's Greg Sullivan. He's our Russia economy and government editor. Well, let's keep the conversation around energy moving, but let's talk about oil prices, because they have steadied as traders focus on 2025 risks, including ample supply and the unpredictability of the Trump administration. The market has been buffeted by bullish and bearish signals, including persistent hostilities in the Middle East and concerns around Chinese demand, the world's biggest oil importer. Let's now bring in Carole Nakhle, CEO of Crystol Energy. So, Carole, thanks for joining us. We just put up a chart a couple of minutes ago showing how oil has been trading in such a tight range. And we know that there are so many cross currents in this market. How do you view those cross currents? And what's your advice to investors trying to navigate what really matters?
It's interesting that despite all the uncertainties when it comes to geopolitics, we saw much less volatility with oil prices than we are accustomed to. And this relates to changes in market fundamentals. And I think there has been a bearish sentiment dominating 2024, and we're likely to see that bearish sentiment continuing throughout 2025. But that said, if we look at 2024, we did not see major supply losses. There was fear of supply losses, especially after the escalation of tensions and the wars and attacks in the Middle East, but those did not translate into supply losses. And at the same time, we had massive spare capacity accumulated in the system as a result of OPEC Plus cuts. So taken together, plus add the picture of a weaker than expected demand, particularly from Asia, this resulted in this kind of stability, relative stability that we have seen in the market, which I would say is not normal if you observe oil markets quite closely, but market fundamentals justify that.
So we had, it seems, conflicting factors almost canceling each other out here and creating stability in the oil market. What is the factor that's going to prevail as we move into the early part of 2025?
Couple of things. First of all, I mean, you mentioned politics and President Trump. 2024 kept us all on edge because of the elections. And now as we enter 2025, we are seeing the consequences of the outcomes of those elections with President Trump taking central stage. So for me, when I look at oil markets in 2025, I would say that the biggest wild card is the geopolitics. I mean, mind you, the Middle East where I'm sitting has not been settled. We still have pockets of resistance. We don't know what's going to happen with Syria, with Iran, with Israel and Hamas, with Hezbollah. It's still lots of things happening beneath the surface. But what will President Trump do on the bigger picture, his relationship with Russia and potential peace deal in Ukraine, we're going to see. But most importantly, what about the relationship with China? I remember before COVID started, there were tensions around trade terms, etc., and these are resurfacing with strong tone this year in 2025. What's going to happen if Trump delivers on his promises and threats of imposing high tariffs on the Chinese economy, which is already struggling? We have seen green shoots coming from China. We have seen fiscal and monetary policies supportive of the Chinese economy, but that could be slowed down by reactions from some of the main markets of Chinese economy, and that is particularly from the US. So geopolitics for me is the wildest card for 2025.
What about if we consider Trump's domestic policies and his whole drill, baby, drill mantra? Do you think that he can even get U.S. shale producers on board with starting to pump huge amounts more of crude oil? I mean, we have seen these companies be more disciplined in their approach over recent years. And also, some of these shale fields are aging. So what do you think the prospect of a huge increase or just an increase at all of U.S. supply coming to the market is for next year?
We have to distinguish between political rhetoric and realities on the ground. Now, of course, if you have a president in charge who is supportive of the oil and gas industry, that provides a confidence boost and some clarity over the next few years, and that will encourage, to a certain extent, investment. But does this mean that investors are going to simply open the taps and start producing at even higher levels than what we saw in 24 simply because the president says, I want to do so? I don't think so, because it all depends on market fundamentals, on the oil price signal and where the oil prices are heading. And if we look at 2025, most of the oil price forecasts that I have seen to date have been revised downward, and we see prices expected to trade, because things can change dramatically, of course, in the 70s more than the 80s and above. That by itself can limit activities in the US. I know shale producers can still make profit if prices stay in the range of the 70s, but not to the extent whereby we're going to see them opening the taps and really producing and flooding the market. So it's important to distinguish between political rhetoric, which can provide a confidence boost to investors, but not necessarily translate into higher production if market prices don't send the right signal.
Yeah, and U.S. producers are already producing more than 13 million barrels a day, so a significant amount of output coming from that market. Now, everything that we've talked about just underscores why OPEC Plus has had such a delicate job, I suppose, if you will, in trying to balance the market when it comes to supply and demand. Do you think that they will be able to proceed with planned output increases in April after delaying the decision to boost output a number of times now?
I have to say that 2024 was not a great year for OPEC and OPEC Plus in general, particularly if we look at their previous forecast when it comes to oil demand. So it seemed like they and the IEA were living on completely different planets. But OPEC and its forecast for oil demand for 2024 was until August this year the most optimistic. They were expecting growth of 2.2 million barrels a day. That did not happen, and we saw them that within few months they downgraded their forecast for oil demand by more than 600,000 barrels a day. That is not insignificant. So whatever they expected the market would deliver did not happen. And now they are more conservative when it comes to their forecast for oil demand for 2025, which is lower what they're expected for 2024 in their December outlook. So they are expecting around 1.4 million barrels a day. Now, if you take that figure and then you look at the supply growth coming from outside OPEC Plus, you can see that the market is going to be in surplus. Now, of course, if OPEC Plus delays, as they said, their production, the release of their voluntary cuts till April 2025, we're going to see the surplus shrinking, but it's not going to disappear. So overall, OPEC Plus has a difficult decision to make. Are they going to put more barrels in the market? If the market allows it, I'm not quite sure. We're going to see what will happen to demand outlook. But on the supply side, since the shale revolution, OPEC Plus has been faced with a major challenge.
Yeah, a major challenge indeed. Carole, I look forward to us having you back on the show in maybe a couple of weeks or 6 weeks or so after we have Trump step in, and we can talk more about how these policies may be shaping up and how that affects the oil markets. That's Carole Nakhle, CEO of Crystol Energy. Thanks so much for your time. Well, coming up, a state funeral to be held for former U.S. President Jimmy Carter. More on his legacy next. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Former U.S. President Jimmy Carter has died at his home in Georgia at the age of 100. The one-time peanut farmer leaves a legacy of promoting human rights and peace after a single term in office that faced challenges including soaring inflation and a hostage crisis in Iran. For more, let's bring in Bloomberg's news desk editor Jill Desus, who joins us from Hong Kong. So, Jill, Jimmy Carter here, he had stepped into presidency after quite a tumultuous time, and he faced high inflation, high energy prices for the American people. What is the legacy that he leaves us with?
Well, ultimately, Chrissy, I think a lot of Jimmy Carter's legacy was built outside of his presidency rather than within it. As you mentioned, his only term in office was really beset by a lot of challenges. While he did have some successes on the foreign policy front, obviously the Iran hostage crisis really sort of consuming the last 400 plus days of his tenure really kind of, created this really immense obstacle. Those hostages were obviously freed. Then after he left office, when Reagan took over and after a landslide election defeat for Carter. But also, as you mentioned, inflation was a massive issue for Jimmy Carter. All that being said, he's really somebody that laid the blueprint for what a president can ultimately achieve after leaving office, rather than, entering private practice, going on and sort of going into retreat. He really kind of, spent the next several decades of his life characterized around, this idea of giving back to society, building, really, sort of important global initiatives here. It's really, through the Carter Center that you saw, massive strides made in disease prevention and control, including, pretty much the almost entire eradication of the guinea worm disease. So you really saw a lot of those efforts made there by Jimmy Carter on behalf of that foundation, that nonprofit, to really kind of, make the world a better place, as it will be. And obviously, he was rewarded in 2002 with the Nobel Peace Prize for a lot of those efforts. So really, I think that's really where you look to when you look at this man who lived for 100 years in terms of some of that longstanding sort of tenure, a lot of that happening obviously after his presidency.
Yeah, so really far-stretching legacy. He was also really important to the Middle East here in the region. He helped to broker the Camp David Accords, which brought peace between Israel and Egypt. Talk to us more about what Jimmy Carter did in the region.
Yes, I mean, I think that, for whatever other foreign policy challenges he ultimately faced, that certainly was, I think, the sort of the marquee, sort of agreement that he had ultimately helped to broker there. Jimmy Carter, of course, was a huge proponent for trying to reach more long-standing peace in the Middle East. He was able to help sort of broker that initial stage, kind of, reaching these accords, this peace treaty between Egypt and Israel, ultimately paving the way, for sort of some broader peace efforts there. He didn't really get what he ultimately wanted, though, which was a broader, conclusion to, the crisis between, the Palestinians and Israel. That's something, obviously, that is incredibly central to global politics today. He actually kind of, expressed a lot of frustration over those efforts throughout the years, including writing a book, sort of examining Palestine in the, sort of the aftermath of that. That book was written in the 2000s. So obviously something that continued to sit with Jimmy Carter throughout the rest of his life. But yes, ultimately just reaching those Camp David Accords, at the presidential retreat in Maryland, kind of brokering that peace, was at least, sort of an early step there to try to, resolve some of those tensions within the Middle East.
Yeah. Well, thanks so much, Jill, for coming on and talking us through these critical developments with the death of Jimmy Carter. That's Bloomberg News desk editor Jill Desis. Well, President-elect Donald Trump has thrust himself into the high-stakes fight over the fate of TikTok in the U.S. He's urging the Supreme Court to pause a law that would ban the social media platform unless it is sold by its Chinese parent company. Trump told justices that they should give him time to resolve the dispute since only he, quote, possesses the consummate deal-making expertise, electoral mandate, and the political will to negotiate a resolution. And coming up, Nigerian billionaire Aliko Dangote says that ending gasoline subsidies is a sensitive issue in the nation used to cheap fuel. We'll have that exclusive interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Nigerian billionaire Aliko Dangote's wealth more than doubled after his long-awaited oil refinery started production in September. The Dangote refinery outside Lagos is the biggest of its kind in the world and one of the most complex, capable of processing most global crude types. Now, it also has a potential to transform Nigeria's economy by making the country self-reliant for fuel. In a rare interview with Bloomberg TV in September, Dangote told us more about the project. Take a listen.
Subsidy is a very sensitive issue. If, I believe the problem is not only the subsidy, it is problem that, once you are subsidizing something, then people will be blotting the numbers and government will end up paying what they are not supposed to be paying. But this, our refinery, will bring quite a lot of issues out there. It will show the real consumption of Nigeria. Because, nobody can tell you. Some people say 60 million liters of gasoline per day. Some say, no, it's less. But right now, if you look at it, by us producing, okay, everything can be counted. Right. So everything can be accounted for. And most of the trucks or ships that will come and load from us, we are going to actually, put a tracker on them to be sure they are going to take the oil within Nigeria. And that, I think, can help the government to save quite a lot of money.
So do you think it's the right time to get rid of the subsidies?
I think it is, because all countries have actually gotten rid of subsidies. Let me give you an example. Saudi Arabia used to give what Saudis, the citizens, believe that, look, oil is our own God-given gift. So the government shouldn't charge us for it. So government were selling it at a very low price. But today, as we speak, gasoline is about 40% cheaper in Nigeria than in Saudi Arabia, which I think it doesn't make sense. That is one. Number two, our price of gasoline is about 60% of the price of our neighboring countries. And we have very porous borders. So it is not sustainable. The amount of subsidies that were paid, government cannot afford those subsidies.
So do you need the government to take away the subsidies for your refinery to be viable?
Well, you see, we have a choice of either when we produce, we export, and when we produce, we sell locally. But we're a private company. And yes, it's true, we have to make a profit. We build something worth $20 billion, so definitely we have to make money. The removal of subsidy is totally dependent on the government, not on us. We cannot change, price. But I think, the government will have to, give up something for something, So I think at the end of the day, the subsidy will have to go.
Well, that was Nigerian billionaire Aliko Dangote speaking to Bloomberg. Now for a look at some of the other stories that we're following. Senegal's prime minister has waved through next year's budget by passing a parliamentary vote on the $10.2 billion package. The president told lawmakers on Saturday the plan would be adopted unless a motion of censure was submitted within 24 hours. The budget comes as an audit reveals a higher than expected debt to GDP ratio and a larger budget deficit, which may impact IMF loan discussions in January. And China and Nigeria have renewed a 15 billion yuan currency swap arrangement designed to boost trade and investment between the two countries. China is Nigeria's biggest trading partner ahead of the U.S. The facility aims to provide liquidity in both currencies, reducing dependence on the U.S. dollar, and can be renewed for another 3 years upon mutual consent. Stick with us for the second hour of Horizons Middle East and Africa next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Korean investigators focus on a bird strike and landing gear failure as they look into the cause of the country's deadliest passenger jet crash. Syria's de facto leader says it could take up to 4 years to hold elections. In a TV interview, Ahmed al-Shara also said he plans to dissolve his Islamic group, Hayat Tahrir al-Sham. And a state funeral to be held for former U.S. President Jimmy Carter, who's died at his Georgia home, aged 100. We look back at his dramatic term in office and his humanitarian legacy. Well, good morning. It's just gone 9 a.m. across the Emirates. I'm Christine Burke in Dubai.
And I'm Lizzie Burden in London, where it's just gone 5 a.m. Very good morning to you. Welcome to the second hour of Horizons Middle East and Africa.
Well, Lizzie, it's great to have you with us today. Let's start by taking a check of where markets are shaping up as we head into the final 2 trading sessions of the year. If you could even believe it, we are finally here at the very tail end of 2024 and what has been a very eventful year. As we head into this, you can see, if you just look at S&P 500 futures and NASDAQ futures, that we aren't seeing a whole lot of risk-taking in this market. Remember, we are just coming off of a holiday-shortened week, and we also have a holiday in a lot of markets this week as well. So we are seeing thinner trading volumes that tend to exacerbate moves to any which one way. But nevertheless, this morning we are seeing more weakness we are seeing that futures indicate potentially more weakness across Wall Street today. We got losses for all of the benchmarks last week on Friday, led by losses for big tech. Now, if we look at the U.S. 10-year yield, we're trading pretty much sideways today. The U.S. 10-year yield continues to hover above 4.6%, some of the highest levels for the 10-year yield that we've seen since the earlier part of 2024 as traders focus in on fiscal risks out of the U.S. and also the trajectory for Fed rate cuts in 2025. And Brent crude as well, trading around or above $74 a barrel. Now, let's talk more about big tech, because I want to show you this chart here, which shows you how Magnificent Seven stocks have performed over the course of 2024. We are heading for a gain of more than 70%. And it was the Magnificent Seven stocks that dragged down benchmarks on Friday. But when you consider how far we have come, it really shows you that the losses are minute in comparison. I suppose the question now becomes whether the losses that we saw on Friday are indicative of where traders potentially think we may be going from here and whether some steam comes out of this market or not. So that's your markets for you. Let's talk about one of the other big stories that is in focus across the world this morning. South Korea is considering special inspections of Boeing 737-800 planes after Sunday's Jeju Airlines crash, which killed 179 people. Investigators are also getting help from the manufacturers and U.S. air safety authorities. Asia transport reporter Danny Lee joins us now for the conversation. So, Danny, there are a bit of conflicting messages here, whether this was a bird strike, whether this was some potential issue with landing gear on this flight. What do we know about the early investigations, and what are the investigations actually focusing on?
Well, as you said, the bird strike, the Mayday call, and the landing gear malfunction, all of these three things which happened in a short space of time, these are at least the things that investigators can look at in the imminent future, and just to try and assess which one of these, if any, caused the accident, or was there a series of cascade of issues that caused this accident. And so, there's a lot for the investigators to try and examine. And whilst they are looking at these three things, they are also keeping an open mind, especially the authorities overall, are keeping an open mind of anything else that may have played a part in this plane crash. Of course, the worst that South Korea has suffered in its country in ever. And so, yes, there is a lot of soul-searching and a lot of reactions playing out, particularly with the authorities trying to undergo checks of the 737-800 aircraft in the country, of which there are 100 operating across the South Korean carriers. So they want to try and reassure the public that flying is safe, and indeed it is, very much so.
And how do you think that this latest incident will play out in the minds of investors into the aviation industry and to regulators? Because there have been a spate of aviation accidents this past year. So put this most recent incident into perspective for us.
Yeah, when you just take a look at the aircraft in question, the 737-800, there are 4,000 of these aircraft flying around the world. It is by and far Boeing's most popular aircraft. And so, this particular accident that took place on Sunday is very small in nature, and, given the proliferation of these aircraft, and then on top of that, the fact that 2023 was the safest year for aviation, being there was no fatal crashes amongst large commercial jetliners. Of course, 2024 is a different story. We have seen in 2024 at the start of this year and play out right through even as late as last week. So clearly there has been a lot going on that has focused the minds, but clearly for regulators, investors, always keeping a keen eye of what is going on.
Thanks so much, Danny, for breaking that down for us. That's Asia transport reporter Danny Lee. Well, in Asia as well today, South Korean investigators are seeking a warrant to arrest President Yoon Suk-yeol after he failed to appear for questioning for the third time over his martial law declaration. Now, if it's granted, Yoon could become the first president in the country's history to be arrested while in office. Finance Minister Choi Sang-mok is currently the interim leader after acting President Han Duck-soo was also impeached, deepening the political crisis in the country.
Well, let's turn to the Middle East now, where Syria's de facto leader says that it could take up to 4 years to hold elections. Speaking to Saudi television network Al Arabiya, Ahmed al-Shara says that he plans to dissolve the Islamist group Hayat Tahrir al-Sham, which, of course, led the insurgency that overthrew President Bashar al-Assad. Al-Shara says that it'll take time for Syria's different forces to hold political dialogue, as well as to rewrite the country's constitution. We can bring in Honor Ant, Bloomberg's managing editor for Middle East and Africa now. Honor, what do you make of these latest comments from the HTS leader?
Morning, Lizzie. These comments were very significant. It marks the first time that Syria's de facto leader, Ahmed al-Shara, provided a timeline, an estimated timeline as to when the country might be able to complete its transition from a devastating civil war that lasted almost 14 years to a political consensus, an environment where the parties that were fighting against or alongside each other can lay down their arms and be part of a political process system, whatever it may look like. It is also significant because al-Shara seems keen on taking the initiative, and which might give him an upper hand in the political process ahead by announcing that he will dissolve the HTS. He did not provide many details on what that might entail, but it's significant that the group, the very group that he led during its advance that began in Aleppo just about a month ago and resulted in the toppling of the Assad dynasty's 50-year-long rule, is planning to dissolve itself, and by that probably setting a precedent for other armed groups to follow the suit. That seems to be Shara's objective, and that's why the comments over the weekend were very significant.
OK, so that's the next steps politically, though, as you say, it could take 4 years for more elections there. But in terms of the broader question of reconstruction in Syria, Turkey eyeing a role for itself, saying it wants to help increase oil and natural gas production in Syria. How do you see Turkey's role shaping up there?
Well, Turkey has been making attempts, taking steps to showcase its influence and probably increase it vis-à-vis the new rulers of Syria. And that's understandable given its political stance during Syria's civil war and its relationship with the groups that led much of the insurgency that resulted in al-Assad's toppling. So that's one thing. And secondly, yes, Syria's reconstruction will take up a lot of time and money. So one thing that Turkish officials are coming up with now, led by the Turkish energy minister, is that if Syria's oil and gas production can be revived to levels last seen before the civil war began in 2011, and that's considered to be, or estimated to be, about 20 times the current level of oil and gas production, then that money, those proceeds, can be used to finance at least part of Syria's reconstruction. That's what Turkey is hoping to have a role in, according to its energy minister, Mr. Bayraktar, last week.
OK, really interesting context. Onur An, Bloomberg's managing editor for the Middle East and North Africa. We thank you, as always. Staying in the Middle East, Israeli Prime Minister Benjamin Netanyahu has had successful surgery to remove his prostate. Netanyahu's office says that the 75-year-old has now been transferred to a secure underground recovery unit for observation over the coming days. Netanyahu is currently facing a corruption trial, but his testimony for the week has been cancelled and tentatively rescheduled to resume on January the 6th. In other news this morning, former US President Jimmy Carter has died at his home in Georgia, aged 100. The one-time peanut farmer leaves a legacy of promoting human rights, peace and democracy. During his single term in office from 1977 to 1981, Carter brokered a historic peace accord between Israel and Egypt, but he also faced challenges including soaring inflation, energy shortages and a hostage crisis in Iran. The longest-living former US president will receive a state funeral in Washington.
Today, America and the world, in my view, lost a remarkable leader. What I find extraordinary about Jimmy Carter, though, is that millions of people all around the world, all over the world, feel they lost a friend as well, even though they never met him. And that's because Jimmy Carter lived a life measured.
Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Well, joining us now in our Dubai studio is Maurice Gravier, Emirates NBD Group Chief Investment Officer for Wealth Management. Well, Maurice, great to have you with us today.
Thanks for having me.
There are so many conversations that we're having on the show, not just today, but over the last couple of weeks about the incoming Trump policies, around the possible fiscal risks out of the U.S. When you look at markets, we are clearly seeing equities in the U.S. come under a bit of pressure. The Treasury's market looks like it's about to erase all of the gains that were potentially seen as yields just continue to climb higher, at least for the 10-year yield. What is front of mind for you as we head into the new year, whether it be fiscal policy risks or for markets?
You're absolutely right. The new policies of the new U.S. administration are going to be at the center of all attention. And I think, we called last year the year of answers because we were very focused on what was going to happen in 2024, growth, inflation, election. And I think in 2025, we're going to focus more on what's going to happen in the medium term. And that's why the policies matter. And I would say there is, of course, one negative risk, which is inflation, because basically if you lower taxes and boost the domestic economy, you take an inflation risk. And the U.S. will also stop importing this inflation through immigration and China stimulating. So you have this risk. But on the other hand, I would say that there is also a kind of a positive risk, which is this Department of Government Efficiency. That's a wild card, I think, because, the people in charge are not here to joke. They are very important pedigrees and everything. And I think if you see a meaningful reduction in the government spending, it's a brand new playbook that we'll have for the next 2 or 3 years.
So do you think we actually see that then? Can Doge under Elon Musk come in, cut government spending, really reduce and bring down the deficit?
I would certainly not exclude this possibility. What Mr. Musk has done with, cutting the cost of sending a rocket by 85%, he looks very committed. And interestingly, in history, when you have had this kind of drastic cuts in government spending, I think, Reagan, Thatcher, Schroeder, Milley more recently, it's usually in a crisis context. The US is not in a crisis context. They have full employment. The crisis is on the fiscal side, probably. So you could imagine something that could even reboot US capitalism if it happens. So that's something that will be very important to look at. Looking at markets, you're right to say that there is some pressure on equities and on bonds. It's interesting to see, to look at both valuation. There is no equity risk premium currently. You pay 22 times. The 10 years at 4.6. It's exactly the same. So we are probably at an interesting point.
So if you take all this into consideration and you think about the fact that we're in the final 2 trading days of 2024, what is keeping you up at night when you think about 2025 at the moment, either because of fear, worry, or excitement?
Of course, we have some excitement to see what will be the new policies and what will be their sequence. And I think that Mr. Trump cares about financial markets, and he also knows that the single economic factor that explained the defeat of the Democrats was inflation. So I think it's going to be a bit careful, probably, on this front. So we are quite constructive for the beginning of the year, and we are excited to see what's going to happen, especially on the government spending side. And we're also excited to see what China is going to do, because they have set a target of 5% growth in 2025, this time with help from fiscal policy, which is something we were waiting for some time. So it's going to be an exciting year. On the fear side, of course, it's geopolitics, and it's not easy to end the conflict, which is what the new administration wants to do. You have to do compromises, you have to make difficult choices, have perfect timing. This is probably the negative risk.
So you mentioned China, so let's go there for a moment. Is 2025 going to be the year where we see the economy make a turning point? We've been talking about the potential for it to really roar back to pre-pandemic levels. We have seen the Chinese government talk about all the stimulus that will be unveiled in 2025, directed at boosting the health of the domestic consumer. Is this going to work this year?
I think it's going to happen, and from what I understand of the very well, first we always have to take the Chinese government very seriously. They usually do what they commit to do, and I think that they are waiting to see what are the actual policies of the new U.S. administration before responding. That's how I understand the fact that yes, they have a non-stimulus. They have started on the monetary side, in particular on the fiscal side. We're still waiting for it. China, there is a real estate crisis everywhere. In history, you can solve this kind of crisis. It's possible. Then there is a consumer confidence issue, and I think that the government can boost that if they are successful. It's a large economy, and growing at 5% for this size is a game changer for the world. So we're impatient to see they have the potential to do it. They have a fiscal deficit of 4%, something like that. If they go from 4 to 5, this could boost consumer confidence, and see what they have done on the auto market. China is able to do things that disrupt the world.
Yeah. I want to focus here on the region just quickly as one final question for you here, because geopolitics, we can't ignore it. There has been a huge shift in the region. We have Iranian proxy groups weakened, Israel looking to Trump to potentially see what happens there with that relationship and what it may mean for where Israel goes from here. how do you view the geopolitical setup at the moment? What are you most looking forward to seeing in terms of developments as we move into the next couple of weeks?
Well, it's very difficult to say. For sure, the situation is complex, but in a way, it's getting a bit simpler. We see that Iran is probably weakening, and the thing that is a concern is to see Israel projecting military operations in every possible neighbor countries. When it comes to where we are here, the UAE, I think that every turbulent area needs an oasis of wisdom, of peace, of good governance. Like Switzerland was for Europe at war for centuries, and I think that this is the UAE, and that's the good news of for the region.
All right, well, good that we're here in the UAE sitting together. Well, thanks so much, Maurice, for your time and for joining us. It's been a pleasure, and we hope to see you back soon. That's Maurice Gravier, Emirates NBD Group Chief Investment Officer for Wealth Management. Well, coming up, the death toll climbs from post-election turmoil in Mozambique, prompting some companies to restrict operations. More on the country's escalating political crisis next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. To Mozambique now, where a monitoring group says more than 260 people have been killed in post-election violence as of last Friday, most of them dying from police gunfire. The unrest has prompted companies such as Sasol and Syria Resources to restrict operations, citing safety concerns and force majeure. For more, let's go to Bloomberg's Ondiro Wanganga. She joins us from Kigali in Rwanda. Ondiro, good morning. How have events unfolded since the validation of the electoral results by the Constitutional Council?
Hi, Lizzie. So we saw this verdict escalate tension in the country. We've seen protests not only in the capital city, Maputo, but across the country. There's been massive looting of stores, shops, supermarkets, food stores, and the damage is incomprehensible. The anger also runs deep. We saw people burning government offices, and the Center for Human Rights and Democracy describes the situation as there was a thick black smoke covering the air, and there was a lot of blood on the floor. The police chief also confirms that 1,500 inmates escaped from prison and they are out at large, and police are trying to hunt them down. And because death toll is rising, lives are being lost, livelihoods are being lost, the government has come under very harsh criticism from the people. One, because of excessive use of force, and two, because they're dragging their feet towards brokering a peace deal. And these protests are expected to continue as the country gears towards the inauguration of President-elect Daniel Chapo.
Yeah, so where does Mozambique go from here? What's the next line of action?
Negotiations are going to be a tough nut to crack, Lizzie, though grounds are beginning to soften. We are seeing opposition candidate Venancio Mondlane saying that he's willing to dialogue if there's international mediation. The president-elect Daniel Chapo adopting a very presidential tone and saying he's going to serve everybody without discrimination, and he's looking forward to resolution of this conflict once he takes over power. But this conflict is not only affecting lives and livelihoods, it has seeped into very critical sectors like mining, like you mentioned in the intro. A ruby mine in the northern part of the country halted production to keep their people safe. We also saw Sasol limit its production to keep their people and their assets safe. And also Tesla's graphite supplier has also declared a force majeure because they are not safe, their assets are not safe, their people are not safe. So all this is putting pressure on the government to try and broker a peace deal sooner than later.
All right. Bloomberg's Ondiro Wanganga, we thank you for the latest in Mozambique.
Well, let's take a look at how markets are shaping up heading into the final two trading sessions of the year. We're looking at U.S. equity futures. We do seem to be seeing softness that is carrying through. We had weakness coming through for Wall Street on a broad scale on Friday, led by losses for big tech, but also for the Russell 2000 and small companies there. When we look at the European stock futures market, you can see as well. I mean, look, just look at the screen. There's a whole lot of red there, and remember that we're in a market at the moment where trading volumes are thin after we came off of a holiday shortened week last week, and we head into yet another this week with New Year's Day being celebrated around much of the world. So something to keep in mind that when we see these moves, it may not be any indication of strong sentiment in one way or the other, but a reflection of some of the light trading volumes. Now, coming up beyond markets, the future of gas transit through Ukraine is at a turning point. And if a last-minute deal is is not struck by Wednesday, then we may see that gas disrupted. We're going to get all the details next with our reporter here in Dubai, Henry Meyer. This is Bloomberg.
This is Horizon's Middle East and Africa. Our top stories this morning. Korean investigators focus on a bird strike and landing gear failure as they look into the cause of the country's deadliest passenger jet crash. Syria's de facto leader says it could take up to 4 years to hold elections. In a TV interview, Ahmed al-Shara also said he plans to dissolve his Islamist group, Hayat Tahrir al-Sham. And a state funeral to be held for former US President Jimmy Carter, who's died at his Georgia home, aged 100. We'll look back at his dramatic term in office and his humanitarian legacy. It's just gone 5:30 a.m. in the UK. I'm Lizzie Burden here in London.
And I'm Christine Berg in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa.
Good to be with you, Christine. A very good morning to you. Let's just check in on these markets on the penultimate trading day of the year. You're looking at futures pointing a touch lower today. We have seen quite the tech sell-off in terms of markets on Friday. That, though, in the context of massive gains for the Magnificent Seven, as you were noting, across 2024. You're looking at the 10-year US Treasury yield pretty steady there at 4.6%. It is near the highest level since May. It climbed last week. Potentially that could weigh on shares in today's session. And you've got oil there trading at $74 a barrel. Pretty steady as well. As I say, it's a quiet end of the year for trading, but the market's very much focused on the outlook for 2025, as well as, of course, monitoring developments in the Middle East. I really like your look back, Christine, on the year that was for US tech. So I thought we'd look now to the dollar over the course of 2024. The Bloomberg Dollar Spot Index up 7.4% so far this year. So nearly its best in a decade, winning against all spot G10 currencies. But I really have to wonder whether this kind of strength is going to last after Donald Trump takes office on January 21 for the new year, I suppose. But really a topic of debate on the MLive blog at the moment.
Yeah, it really is a major question where the dollar goes from here, where treasuries go. I mean, there's just so much uncertainty. Now, let's talk about Europe, Russia, Ukraine, and a major issue that is coming to the forefront of attention this week because Slovakia is urging the European Commission to address the looming halt of Russian gas supplies through Ukraine, saying the economic impact on the EU will far outweigh the effects on Russia. Ukrainian President Volodymyr Zelensky is set to block Russian gas flows through his country from January. Bloomberg's senior reporter Henry Meyer joins me now in our Dubai studio. So, Henry, great to have you on the show to talk about this. We were talking just before we got into this segment about how Russia and Ukraine tend to go down to the wire with these deals. Do you expect that we will see a new agreement struck so that Russian gas can continue flowing through Ukraine to Europe?
You know, I mean, I think it's hard to predict, but I would say that there is a strong possibility that that may happen. I mean, there are various compromises which are being looked at behind the scenes. Ukraine has made it quite clear that they're not going to accept a continued transit of Russian gas. But, for example, they could decide to buy the gas. These European customers, Slovakia and Hungary, could decide to buy the gas at the border between Russia and Ukraine, and then what would be transited would no longer be Russian gas. That's one option. Another one is for a swap arrangement with Azerbaijan, which could provide this gas to Hungary and Slovakia, and Russia would then sell its own gas to Azerbaijan.
And where is Ukraine's head at in all of this? There were some comments in the story that we wrote saying that if Ukraine doesn't go forward and actually get a new deal over the line or agree to a new deal, then it perhaps becomes a target in terms of the assets that actually move this gas.
Yeah, that is correct, Christine. I mean, you know, what we've seen is that the gas transportation network in Ukraine has not been attacked by Russia. You know, Russia has carried out devastating attacks on other energy infrastructure. So that is definitely one thing that is uppermost in the Ukrainian leadership's mind. Of course, it's a very difficult thing. The two countries are at war, and to have this arrangement whereby Russia is profiting from gas transiting Ukrainian territory is pretty difficult pill for them to swallow.
Yeah, I suppose the optics of that are challenging. Now, we had comments over the weekend as well out of Russia where they basically poured cold water on the idea that they would have any type of ceasefire negotiations, but they did say that they remain open to talks that may eventually lead to some sort of peace agreement. What did we hear from Russia?
Well, I mean, you know, the Russian position is that they are progressing on the battlefield at the moment, albeit very slowly and albeit at a very high cost of casualties. You know, they've seen Trump, who's now trying to get them to agree to a very quick cessation of hostilities. They've rejected that now publicly. However, they do see an opportunity to try and reach an agreement. That's going to take longer. I mean, they have very high demands, you know, two principal ones. One, that Ukraine agree to renounce its ambitions to join NATO, and the second one, that Ukraine would agree to very strict limits on the size of its military. Those demands, you know, are, as I said, are very difficult for Ukraine to agree to, and I think we will see talks continuing over many months.
Yeah. Well, thanks so much for breaking all that down for us. It seems like we have a lot to watch, and we will watch it closely. That's Bloomberg's senior reporter, Henry Meyer, here in our Dubai studio. Thanks so much again, Henry.
You're welcome.
Well, speaking of Russia's international relations, we already mentioned the South Korean plane crash. Now we turn to Azerbaijan, where the president, Ilham Aliyev, says that Russia accidentally shot down Azerbaijan Airlines passenger plane that, of course, crashed last week, killing 38 people. Aliyev told state TV that Moscow should take responsibility, and his statement came a day after a phone call with the president of Russia, Vladimir Putin, who apologised for the incident without saying that his government had been at fault. Now, in other news this morning, former US President Jimmy Carter has died at the age of 100 at his home in Plains, Georgia. His term in the White House was marked by significant achievements, including brokering a peace accord between Israel and Egypt, as well as economic turmoil at home. Bloomberg's David Weston takes a look back at his life.
President Carter came to office in the wake of Watergate and Vietnam with a commitment to right the ship of state.
President Carter brought back to government honesty, integrity, and faith in government. He ran as a candidate on a government as good as its people, and he truly did deliver that.
I think President Carter in many ways was ahead of his time in terms of his emphasis, for example, on human rights, in terms of his thinking about alternative energy, in terms of his role in the Middle East peace agreements that he put together. And we all know that his ex-presidency, which has been such a long one, has been graced by remarkable contributions to humanity by former President Carter. I think right now, he is seen very favorably. I'm really happy to see that because he's a very special man.
One of President Carter's biggest challenges was energy in the face of the second Arab oil embargo.
Well, he was president during a very challenging time. As you recall, there was the oil embargo, which drove oil prices up dramatically. That became a catalyst for the highest inflation that we had had really since the war, and probably even before that. And so he had to take some very tough fiscal measures. He did appoint Paul Volcker, who, by very much tightening monetary policy, caused a recession, which certainly was not an easy thing for President Carter to run through.
He was the first person to talk about energy and how we had to start looking at renewable energy plans and how our country could invest and incentivize in that area. And I don't know if you remember, but he had a solar panel on the White House, which when he left, President Reagan took down. But he had fuel mileage standards and, really realized, I think, way before anybody else that we had to start thinking about what climate and what it was doing to our planet.
But as influential as Jimmy Carter was as president, he will be remembered every bit as much for what he did after he left office.
The thing, though, that I think is absolutely most notable about President Carter is we can all debate the relative merits of any individual president's term. But I think it's inarguable that President Carter is the single most impressive, most successful, and most to be admired ex-president in the history of our nation. This is a man who took the responsibilities of being a visible public figure incredibly seriously and was a role model to all of us.
Well, a remarkable life in and after office. Let's stay in US news now. President-elect Donald Trump has thrust himself into the high-stakes fight over the fate of TikTok in the US. He's urging the Supreme Court to pause a law that would ban the social media platform unless it's sold by its Chinese parent company. Trump told justices that they should give him time to resolve the dispute, since he only possesses the consummate deal-making expertise, electoral mandate, and the political will to negotiate a resolution. Elsewhere, US Treasury Secretary Janet Yellen has told congressional leaders that a special accounting manoeuvres will be needed in mid-January to avoid breaching the debt limit. In a letter to lawmakers, she says that's likely to happen from around January the 14th, and it kicks off what is likely to be a prolonged tussle over fiscal policy ahead of the handover to the incoming Trump administration. And the Japanese supplier of chip package substrates used in semiconductors made by NVIDIA says it may need to increase production capacity to keep up with demand. Ibiden CEO Koji Kawashima told us exclusively that sales of the AI-use substrates are robust as his company builds a new factory in central Japan. He also gave us an outlook for another key US customer.
We have a very long relationship with Intel, and we have been doing business with them for about 30 years now. So there is no doubt that Intel is one of our important customers. We will continue to support
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, and we've got futures pointing lower here in Europe. But let's talk about the politics now. Elon Musk has repeated his support for the far-right party Alternative for Germany, AfD as it's known. And it comes after German President Frank-Walter Steinmeier dissolved Parliament and set the country's snap election for February, formally endorsing a timetable proposed by Chancellor Olaf Scholz. Let's bring in Bloomberg's Oliver Crook now for more. Ollie, the main event really heading into next year in Europe is Germany's election. You're going to be all over it for us. Just talk to us about the tensions in the country. I'm really wondering how much influence Elon Musk has in Germany.
Yeah, I mean, listen, Lizzie, this is sort of an interesting sort of foray for Musk to sort of wade into. We'll get to that in just a moment. But, you know, listen, we have now the timeline established. The president has dissolved the Bundestag officially. So now we're officially on that sort of timeline to go to the election on February the 23rd. When you look at the polls, again, what we're seeing is a picture that we've seen sort of since the very beginning, where you have the CDU leading with 31%. What is very interesting, Lizzie, in all of this is the Alternative for Deutschland, right? This is a party that got only about 12.6% of the vote in 2021. They're looking to get 20% of the vote this time around. They're going to be the second biggest party in Germany. And this is the party that now Elon Musk has decided to sort of unofficially, because there's no really official capacity for him to endorse anything, to endorse. And we had him sort of over the weekend writing in one of these sort of newspapers here in Germany, and I'll quote directly, saying that the AfD, even though it is described as a far right, represents a political realism that resonates with many Germans who feel their concerns are ignored by the establishment. It addresses the problem problem of the day without the political correctness that often obscures the truth. Now, listen, Elon Musk has been very critical of the German government in the past. He has called Olaf Scholz a fool. He has been very critical of German bureaucracy in the past. Friedrich Merz, who is now the leading candidate, the head of the CDU for one, responding to some of these sort of these statements that Musk is saying that I cannot remember a comparable case of interference in the election campaign of a friendly country in the history of Western democracies, and that is the leading candidate for the CDU. And listen, the AfD is a very charged subject here in Germany. We just interviewed the head, the chancellor candidate for the AfD. You know, some of their policy proposals is unlike some of the other right-wing groups within Europe. They want to leave the Eurozone. They want to leave the euro. They obviously are very, very sort of hard on immigration and deregulation, some of these sort of economic themes that Elon Musk is picking on. But this is a very fraught moment, and particularly to have Elon Musk not content to just sort of begin going from the world of American business to American politics, now wading into German politics.
Yeah, and indeed parallels with his kind of support for reform here in the UK on the right wing of politics. But of course, Ollie, that instability in Germany is just one of the many issues facing Europe as we head into 2025. What's going to be on your radar for the new year?
Yeah, I mean, listen, Lizzie, I guess really the sort of main event, generally speaking, these days is budgets. That may not be the most sort of exciting thing, but it's the German budget that brought down the government. And guess what? It's the French budget that's been bringing down that government. And when you think about the sort of great many things that are facing Europe coming into 2025, you have the Trump presidency. He'll be inaugurated on January the 20th. There is the huge question looming of, you know, tariffs and a sort of global trade war, what it could mean not only for the United States, but also in the relationship with China. You know, and again, this sort of also great geopolitical void that Trump could leave, whether or not he was going to continue to support Ukraine. But it's not just Ukraine, right? For the Europeans, Syria is also a critical matter. The United States and Donald Trump has said that basically he doesn't want to have any involvement there. This is the source of many of these sort of refugees and immigration that Europe has seen over the last few years that has prompted a lot of the other sort of political unrest within Europe, including the AfD, to say nothing of the other sort of issues of election interference across Georgia and Romania. You just think about the sort of scope and the scope and the scale of the challenges ahead of the Europeans, where you basically don't have functional governments in the two main engines of Europe. These are going to be very, very challenging times. And the real question is, who is going to pick up the mantle in Europe for leadership and really sort of be able to speak for that European voice and speak credibly at a time when the Europeans seem very, very weak at the moment, to say nothing of the fact that they have still to figure out their sort of competitiveness agenda, which is going to be front and center for the new European Commission, which just kicked off in December.
Yeah, headaches geopolitically, politically and economically. Bloomberg's Oliver Crook, you've got a lot to cover in 2025. We thank you, as always. But coming up on Horizons Middle East and Africa, we're going to look at the Nigerian billionaire Aliko Dangote, who says that ending gasoline subsidies is a sensitive issue in the nation used to cheap fuel. We'll have that exclusive interview for you next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Nigerian billionaire Aliko Dangote's wealth more than doubled after his long-awaited oil refinery started production back in September. The Dangote refinery outside Lagos is the biggest of its kind in the world and one of the most complex, capable of processing most global crude types. It has the potential to transform Nigeria's economy by making the country self-reliant for fuel. In a rare interview with Bloomberg TV in September, Dangote told us more about this exciting project.
You know, people really don't understand also what we add to the economy, but in a very short period of time, people will do understand our own contributions to the economy.
Aliko, your fertilizer plant is only, what, 50% of capacity?
It was 50% capacity, but in the last in the last 1 month or so, we have enough gas, so we have started now running at about 85%. You know, I hope it will continue. But you know, there's also the gas, which is, they call it OB3. OB3 is a gas pipeline which is bringing gas from the east to the west. Because in the west, they have industries. So that's why the demand is. In the east, the gas is there, but no demand. If they have that, which they promise that they're going to finish in October, then we have more gas than we needed. You know, so I think that issue is being resolved, and that is why we are also trying to invest more by putting up another plant to double our fertilizer plant from 3 million to 6 million tons.
So the refinery's built. I know you're the biggest Arsenal, one of the biggest Arsenal fans I know. Do you still want to buy the club?
Francine, I think that time has passed. At the last time when we had this interview, I told you that, yes, as soon as I finish with the refinery, I'm going to try and buy Arsenal. But the issue is that, you know, everything has gone up. And the clubs, too, they are all doing very well. Arsenal is doing extremely very well. That time, Arsenal wasn't doing well. I think, you know, I don't have that kind of excess liquidity to go and buy a club for $4 billion, so to speak, and you know, use it as a promotional something. And you know, I'd rather do something with the money. What I will do, I will continue to be the biggest fan of Arsenal. I watch their, you know, games every day. Anytime that they are playing, I will watch. So I will remain a major supporter of Arsenal, but I don't think if it makes sense today to buy Arsenal.
Do you regret not buying it before? Last time we spoke?
Actually, I regret not buying it before, but you know, my money was more needed in completing my project than buying Arsenal.
So you would have bought it, what, for $2 billion?
I would have bought it for $2 billion, yeah, but you know, I wouldn't have been able to finish my project. You know, so it's either finish your project or go and buy Arsenal. And I think the best decision was for us to now go and complete our refinery, of which a lot of people don't believe it was going to work. You remember you interviewed me about this refinery, and our refinery really has been it has been a discussion point all over the world.
Yes.
Because our capacity is about 1.1% of the entire global refining capacity.
Yeah. Not so without challenges.
Of course.
It's had challenges.
With a lot of challenges, a lot.
But you do it, would you do it all over again?
I wouldn't do this kind of huge refinery project again. You know, you can see, I told somebody, doing this refinery is what actually, you know, gave me my gray hair.
Well, that was Nigerian billionaire Aliko Dangote speaking to Bloomberg. Now for a look at some of the other stories that we're following this morning. Senegal's prime minister has waved through next year's budget by passing a parliamentary vote on the $10.2 billion package. The president told lawmakers on Saturday the plan would be adopted unless a motion of censure was submitted within 24 hours. The budget comes as an audit reveals a higher than expected debt to GDP ratio and a larger budget deficit, which may impact IMF loan discussions in January. Now, let's talk about one corner of the market that is seeing a fair bit of action this morning, and that is U.S. natural gas futures. It looks like maybe a little bit of a late Christmas gift for the natural gas bulls out there. Futures up more than 9%, and this comes on the back of an outlook for colder weather in January and also for below normal temperatures across the month of February as well. So we're looking at potentially 2 months where we can see a drawdown in stockpiles for heating fuel in the United States. So something to keep your eye on today, because that is one of the biggest movers globally. Now, let's also look at oil markets. If we could just flip that over and check on where we are trading this morning. Brent crude is pushing higher after on Friday, closing above 74 for the first time in a month. WTI also pushing just a touch higher. But that is it for Horizons Middle East and Africa for today. I'm Christine Berg in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.